Ever wondered what the stock market and the economy will look like just a few years down the line? Well, as we edge closer to 2026, there are some whispers and speculations gripping investors and economists worldwide. Imagine waking up on a crisp January morning to find that the global markets have taken an unexpected twist overnight. Could it be the rise of a brand new financial power? Or perhaps a technological shakeup that no one saw coming? By 2026, we might be looking at a very different economic landscape. Analysts predict a surge in renewable energy stocks as climate commitments tighten and tech innovation skyrockets. And yes, AI and blockchain aren't done transforming our lives just yet. Meanwhile, traditional sectors like oil and automotive could be on a shaky path, with companies forced to pivot or decline. But hold on, it's not all doom and gloom. These market flips also translate to golden opportunities. The era of digital finance will likely unlock newer, dynamic investments, and global trade might see diversifications that open up fresh avenues for wealth. So, how do we prepare for these transformative shifts on the horizon? Let's dive deeper and explore the potential scenarios that could redefine your financial future in just a few short years. All right, so let's talk about digital finance for a moment. As we approach 2026, the way we handle money is set to evolve dramatically. Imagine a world where cash is almost obsolete, and transactions happen at the speed of light through decentralized networks. We're already seeing major shifts with cryptocurrencies gaining traction, but the real revolution lies in how digital currencies from central banks could reshape day-to-day transactions. These shifts could stabilize economies or introduce new layers of complexity and risk, depending on which side you're focusing on. Now let's pivot to another seismic shift: the role of AI in investment strategies. Gone are the days when stock picking relied purely on gut feeling or individual expertise. By 2026, AI-driven algorithms might dominate the trading floors, analyzing mountains of data faster and more accurately than any human. They're developing strategies that adapt in real time to market swings we can't even foresee. For investors, this isn't just about embracing new tools. It's about changing how we think about investing altogether. It means education and adaptation will be key. Proactive learning about these technologies and how they integrate with economic processes could be your hedge against obsolescence. Isn't it fascinating to think about how this blend of technology, foresight, and strategy will craft the future economic landscape? The journey into 2026 certainly promises to be an exciting ride on this roller coaster of the month. Let's delve a little deeper into what AI's takeover means, not just for stock markets, but for employment. As algorithms get smarter, there's a growing worry about job displacement. A future where machines dominate tasks raises the stakes, challenging us to find the balance between technology and the human workforce. Businesses are facing pressure to adapt, redefining roles that humans will fill versus those handled by AI. But here's where it gets interesting. This could be a boon for entrepreneurial spirit. With traditional jobs getting disrupted, 2026 could see a rise in freelancers, contractors, and whole new industries sprouting from the ashes of the old ones. Think about it. This transition might drive people to innovate in ways we've never seen before, turning economic uncertainties into a canvas of potential and creativity. Shifting gears, there's also the story of globalization and its potential rewriting. As we near 2026, countries might start drawing tighter economic lines, reevaluating trade relationships post-pandemic. This doesn't spell the end for global commerce. Rather, it might spark a reinvention of how resources and goods are exchanged, relying on tech-driven efficiencies and regional collaborations. These seismic shifts are already peeking over the horizon, daring us to prepare and adapt. The question remains: will we be proactive participants in this unfolding economic saga, or passive observers? There's no time like now to decide our stance. Now, let's venture into a fascinating subplot of this unfolding story: the pivotal role of sustainable investing. By 2026, the drive for greener portfolios might not just be a trend. It could become an essential business strategy. We're seeing it already, with investors increasingly prioritizing ESG factors. That's environmental, social, and governance, for those catching up. This shift isn't just for the sake of appearance. It's about recognizing that companies who harness responsible practices are not only doing good, but are performing better financially in the long haul. Think of it as the new gold rush, but for green initiatives. As regulations tighten around carbon footprints and resource management, a company's innovation and sustainability could directly impact its market value. This means savvy investors might be scoping out opportunities in sectors like clean energy, sustainable agriculture, and green tech, areas forecasted to boom, driven by necessity and innovation alike. But there's more. The real game changer is the consumer. As preferences sway toward ethically produced goods and carbon-neutral commitments, companies must align their values with this demand. It's a dance between consumer expectations and corporate actions, fostering a future where profitability walks hand in hand with accountability. For us, this means paying keen attention to these evolving standards, making informed choices, and perhaps even contributing to these greener pathways in our investment portfolios. As the pages of 2026 unfold, are we ready to leave a lasting, positive mark on the economic and ecological landscape? The story is ours to write. As we wrap up this peek into 2026, remember, the words preparation and adaptation are likely to be the cornerstones of navigating the changes ahead. Whether it's embracing technological advancements, pivoting towards sustainable investments, or adjusting to new economic dynamics, each beckons us toward preparedness and proactive decision-making. The key takeaway? This future isn't merely something that happens to us, but something we help shape with our actions today. So I challenge you to delve deeper into these subjects, arm yourself with knowledge, and adapt to the unfolding economic landscape. If you found this valuable or have thoughts on navigating these shifts, hit that subscribe button and join a community committed to thriving amid change. Share your insights in the comments below, and let's keep this conversation growing. Together, let's shape a future that's both prosperous and sustainable. See you in the next video.